What's going on, world? Welcome to another episode of Insightful Principles. And I'm glad you all are watching right now. And what I want to discuss here today is how to become a value investor like Warren Buffett, and want to go over some of the indicators that Warren Buffett himself looks at when he's evaluating a stock, if it's overvalued or undervalued. So I want to go ahead and get the disclaimer here out the way. My content is designed for informational and educational purposes only. Please consult with an advisor or a brokerage firm when making an investment decision. The information that I provide to you, you must do your own research, and you have to become aware of the risks when making an informed financial decision. You must understand your own risk tolerance, your time horizon, and be comfortable with making a specific investment decision. So, what I want to discuss is value investing. Warren Buffett, for all of the years that he has invested in and everything that he's created with Berkshire Hathaway, and even when you look at the companies that he has acquired, his whole approach is value investing. And what that means is that he's looking for companies that are undervalued, that have the potential to bring in great returns in the future. And his strategy is simply he's trying to determine a company's intrinsic value by analyzing their fundamentals. So he's wanting to understand the intrinsic value of a stock, and he wants to purchase that company for much less than what it's worth. So it's all about, getting in at the lowest price possible, under what the company is actually worth compared to what the company is worth. And honestly, that just comes down to looking at the market price of the security, and then looking at the fundamentals such as the income statements, the balance sheets, and determining what the value of this company is, and seeing if that market price is an indicator of it being, too high for that particular stock, or if it's at a discount and it's too low, where that's what presents the best, investment opportunities. So his whole mindset is he wants to own quality companies that will generate earnings consistently. Buffett's goal is he wants to see the business as a whole, and then he evaluates if the company can make money as a business. So most of the legendary investors, whether it's Peter Lynch, if you're looking at a lot of Charlie Munger, which he works alongside of Warren Buffett. A lot of these investors, they understand the ability of looking at the intrinsic value of a stock and really buying it for less than what it's worth. So it's really, that's the strategy when you look at a lot of the legendary investors, even when you look at Ray Dalio as well. So what Buffett tends to look at is he's looking at the price to earnings ratio. He likes to also evaluate a company's performance, their debt, and then their profit margin, and then lastly, their economic moat, which is also known as their competitive advantage. All of these different areas are very important. And what I wanted to break down first is a company that, for full disclosure, I'm invested in this company, which is AMD. But certainly do your own research. And, I'm not making any investment recommendations. But when it comes to AMD, that's one company that I have done fundamental analysis on, and understand that it is a great company. When I look at a lot of the just balance sheets and the income statement, I look at their cash flow, their shareholders equity. They really have a lot of value that they offer to shareholders, and I actually wanted to go over some numbers here with you all today. Now, when you look at the price to earnings ratio for AMD specifically, as you can see with the trailing 12 months, which is the second option here that you see listed with the key statistics, AMD price to earnings ratio is 38.98%. Now, the industry average is only 32.87%. So when it comes to the price to earnings ratio, essentially this is making a comparison of looking at the price of the stock and then the earnings per share, and it also shows how much as a investor that you're actually getting with your earnings per share. Now, in order to calculate price to earnings, the ratio, simply you're taking the market price of the security and you're dividing it by the earnings per share. And a lot of times when you will hear analysts or investors, especially on CNBC, they will always mention that, this company is trading, 20 times its price multiple. And a lot of times when they are explaining that, what they're essentially saying is that an investor is willing to pay $20 for $1 of his current earnings. So in the case of AMD, their price multiple is 38 times. So an investor is willing to pay $38 for $1 of his current earnings. So, it's a great indicator to look at to understand, how that market price is priced into the earnings per share. So it really allows you to be able to make that comparison. And when you look at also for AMD, one thing that's very great to look at is their cash flow growth rate. And as you can see in the last 5 years for AMD is 36.90%. And the industry average for the semiconductor space is 20.82%. So, when you are looking at the fundamentals, I love looking at, is this company able to generate cash flow for me, in the future? And, looking at the past isn't it isn't the only indicator to predict that what's going to happen with future earnings. Is not a guarantee looking at past performance, but it can at least give you an indicator to see what direction the company is going in. And if you look at another company like Intel, their price to earnings ratio is a lot lower. So it's actually for the trailing 12 months is 11.92. So you can see that the stock, when we looked at AMD, is about $109, as of market close on September 8th of 2021. But when you look at with Intel, it's $53.57. So it's a lower stock price, and you tend to see a lower price to earnings ratio. Now, they are lower than the industry average, so that can show that the company right now is not priced as high in comparison to the average of the market. But then when you look at the cash flow growth rate in the last 5 years, it's only 10.48%, and that's lower than the industry average. So when I see that, I'm seeing that the company cash flow isn't generating as high as AMD. Now, AMD has a higher price to earnings ratio, but I'm willing to pay a little bit more for the stock, knowing that the cash flow that I'm going to get in the future. And another indicator that you can look at is the company's performance. This is another ratio, and this is another indicator that Warren Buffett will look at himself, and it determines the income that you will earn with the shares that you have with the company. So this allows you to see how the company performs compared to other industries. And the way to calculate return on equity, which is this is the ratio that you're going to look at when you're evaluating companies' performance. You can take the net income and you can divide it by the shareholders' equity. And the net income is shown on the income statement, and then the shareholders' equity is also that's going to be on the balance sheet, and that's simply the assets minus the liabilities. Now, when you are looking at that as well with these indicators, historically, you want to look at the last 5 to 10 years, because that's going to really give you a blueprint on a longer case study of the company. So as you can see here, when we look at AMD, for their net income, they were able to produce approximately $2.49 million. And all of these numbers are in millions of dollars. And then when you look at the shareholders' equity, they were actually able to produce, and this is for the year of 2020 that I'm looking at, their shareholders' equity was $5.83 million. And when you come to those calculations, what you end up getting is you get a return on equity of 0.43%. 0.43% is what you get when you look at the return on equity for AMD. And this is just great to look at when you can see that their return on equity shows that management is giving shareholders more for their money. And when you look at the shareholders equity, if you see that it has increased over the last, 3 to 4 years, in this case, when you see with AMD, every year since 2017, it has increased. So I love seeing that as an investor because that shows that I am getting, equity, with my investments. I'm getting more investing with this company. So I love seeing that. And then also, you want to also look at and make sure that the debt, which is the next indicator that we're going to look at. You want to make sure that the debt is decreasing because that plays a role in the company's ability to be able to generate cash flow for their shareholders. So the next indicator is actually the debt to equity ratio. And this is another aspect that Buffett will pay attention to because it can tell you if a company has more debt in comparison to equity with its balance sheet. And as an investor, you want to see a company with a small amount of debt because that means that the earnings growth is being produced from the shareholders' equity compared to them just simply borrowing money. So to calculate the debt to equity ratio, you're going to take your total liabilities and you're going to divide it by the shareholders' equity. And when you are looking at this for AMD, as you can see here that the total liabilities for the company in the year of 2020 was $3.1 million and their shareholders equity was $5.83 million. And when you get the result of that calculation is 0.54%. Now, typically a good debt to equity ratio is usually a percentage that's below 2%. So it's good to see that AMD, they don't have a lot of debt on their balance sheet in comparison to their shareholders equity. The shareholders equity has increased over the last 3 years and their liabilities have decreased. I love that as an investor. And, another indicator that you're going to want to look at is the profit margin. You always hear the cash is king, and the profit margin, it allows you to see if a company is executing very well and if they're efficient with controlling their expenses. So when you're looking at the profit margin, you're going to take the net income and you're going to divide it by the net sales. And, as you can see here for AMD, their net sales was approximately $9.7 million was their net sales. And then their net income was approximately the $2.4 million. So when you break down those calculations, what you end up getting is 0.26%. So you're simply taking that net income and you're dividing it by the net sales. And then with AMD, they have a net income of 0.26% for each dollar generated. So they're making 26 cents for each dollar generated. And 20% is or higher is a good profit margin. 10% tends to be average and 5% tends to be a low percentage. So this is great to see. You can see that the company, they have great profit margins and they are being able to increase their shareholders equity as well as minimizing their debt. Now, the last indicator that you want to look at with a company when value investing is their economic moat. This is essentially their competitive advantage. You want to look at what they have in their system and processes or even within their supply chain that cannot be replicated. So what does a question that you want to ask yourself is, what does the company have within their business that gives them a unique proposition compared to other companies in the industry? And an economic moat, it really essentially provides a distinct advantage to a company that it has over its competitors. Now, in result, this allows a company to protect their profitability and their market share. That's why you want to invest in companies that have an economic moat. Like if you look at an Apple, all of their services are you can't live without one of their services. They have a moat on developing multiple products and services within their ecosystem. So if you have an iPhone, you have the iCloud, you have Apple Music, you have the AirPods, and 9 times out of 10, if you want a laptop, you're going to get a MacBook because all of your stuff is integrated within their ecosystem. So that's why, you want to look at companies that have an economic moat. And when you look at AMD, their economic moat is the market share that they have been able to obtain in the gaming console space. As some of you may know, or, maybe none of you may know, they make the microchips for the PS5 and also the Xbox X. Those companies decided to go with AMD to produce their processors within their gaming consoles. And AMD actually now has a market share of 30% among gaming PCs. Now, Intel, their competitor, they still have 70% of the market share, but the gap has been, consistently closing in the recent years. And also the AMD processors tend to have a lower price offering in comparison to some of the other companies like Intel, and they provide superior performance for the same price that you would pay, for example, an Intel computer. And I think that the impact that they're having in the CPU space, which is the CPU is simply the electric circuits that facilitate a computer program. They've been making some significant updates, and they're creating new technology to really put them in the forefront in the semiconductor space. So I definitely think that AMD is a great company. And when it comes to value investing, these are some indicators that you want to look at. And Warren Buffett, is a great investor, a legendary investor that looks at all of these indicators, and it keeps investing simplistic and allows you to look at specific things such as the debt that the company has. You're looking at their cash flow. You want to look at the shareholders' equity. You want to look at their performance, their price to earnings ratio, and you want to look at what competitive advantage they have. So definitely take this in mind when you're value investing. And if you all can continue to like, subscribe, and share this video, that would be greatly appreciated. Continue to share this information with financial literacy, with creative investing, with your family and friends. If you also can support the Patreon channel where I create exclusive content in the areas of finance, business, and investing. I will have that in my link tree, and it allows you to connect with me more personally. And I actually have everything from Zoom calls to my private investment chat where I share ideas with everyone in my mastermind, and it allows you to learn more about me and be able to get some ideas when it comes to a hands-on approach when it comes to your finances. So definitely support the Patreon if you're wanting to learn more. And thank you all so much for tuning into another episode of Insightful Principles, and take care.